Hey there! Today, let's talk about mortgages and a cool trick to save $64,000 in just 24 months. I've been hearing from a lot of people who recently bought homes with a 7% interest rate, and it's got me wanting to break down in tears for them. So, let's talk about some real financial wisdom. People might say to you, oh, just go for a little 4% mortgage instead of a 12% line of credit. It's way better. But let me break it down for you. Ever wonder what a 4% mortgage really means? Well, it's not as sweet as it sounds. Multiply 4 by 2, add a 0, and boom, you're looking at 80% interest on that mortgage. Yup, 80%. Now, let's compare a 12% line of credit to a 7% mortgage they're offering you for your home. I've got a real example of someone who did a $500,000 home at 7%, and trust me, it's eye-opening. After this, you'll know why a 12% line of credit is way healthier for your finances than falling for the 7% mortgage trap. Imagine you have a $10,000 line of credit, and you decide, hey, let's put this on the principal of my home. How much interest would that save you? Now, let's break it down with real numbers. You put the $10,000 on your $500,000 home, and let's say your payments start in December 2023. After that 10 grand, your balance is down to $490,000. You're making monthly payments of $3,326. Not too shabby for such a massive home, right? Now, let's see what happens if you just keep making those mortgage payments for 23 months. By November 1st, 2025, you'd reach that $490,000 balance. But how much interest did you pay over those 23 months? Now, what if you took that $10,000 and put it directly on the $500,000 home on December 1st, 2023? Your balance is instantly at $490,000. But wait, this is a 12% line of credit, so let's crunch the numbers. 10,000 times 12% equals $1,200, and that's per year. Now, what if you decide, I'll just leave that 10 grand sitting there, paying the interest every month, maybe around $100 a month. If you divide 1,200 by 12 months, you get $100. So, yeah, you could just let it sit there. Or, you could take your $10,000, use it like a boss, and put it in your line of credit. What happens? The balance goes down, and the interest on the loan is now zero. Zip. Nada. Your expenses can come out of that line of credit, and you're golden. Now, let's compare. 23 months of mortgage payments versus one chunk of $10,000 on the line of credit. Guess what? You save yourself $66,453 in interest over 23 months, just by doing that one-time $10,000 move. Impressive, right? Your support for our channel is greatly appreciated, so please take a moment to like and subscribe. But it gets even crazier. At around 48 months, you might get letters from your mortgage holding bank offering you equity in your home. Sounds good, but it's a trap. If you refinance, you're basically paying all that interest over again. They already got a home out of you in the first 4 years, and they're trying to do it again. So here's the deal, you need to make a choice. Are you going to be savvy about your finances, or are you going to fall into the interest trap? This is important stuff, and I don't care if your mortgage rate is 3%, you're still getting hit with interest you don't deserve. I hear from so many people who went to the bank for a line of credit, and guess what the bank does? They try to push a loan on them every time, saying, forget the 12% line of credit, take this 4% loan instead. It's a game, just like mortgages. They front load all that interest so you end up paying the bank first, and only a bit goes to your home. By the 15-year mark, if you're paying a $500,000 mortgage, about half of that is still going to the bank. It's frustrating to hear that young folks are getting hit with 7% mortgages. It's like highway robbery, and it's been going on for way too many years. But here's the solution. go get yourself a line of credit, even if it's at 18%. You can beat the system because 7 times 2 is 14. Add a 0, and it's 140%. That's way less than the 12% they're throwing at you. Imagine borrowing $500,000 with a 7% mortgage rate. That means you pay $35,000 in interest every year. Now, think about doing this for 30 years. The total interest you'd pay over those 30 years adds up to a whopping $697,985. That's like 140% of the original loan. I know it sounds like a lot, but don't throw your money away. Don't let the banks take advantage of you. We need to be smarter than the bank. Young families are diving into debt without knowing there's a better way, and I want to shout it from the rooftops to everyone willing to listen. Be smart about your mortgage. Have a line of credit ready to take control of your debt. It's a decision only you can make, so make it. Here's a cool money-saving tip. Ever think about the money you spend on Starbucks coffee or lunch fees? Picture this. You go to work and spend $15 on a sandwich. Seriously? You could make a sandwich at home for just 99 cents and bring it with you, as Kevin O'Leary suggests in the video. He's saying, if you add up those daily expenses, it turns into a lot of money. Many people, especially those starting out in big cities with their first $60,000 job, end up wasting about $15,000 a year on unnecessary stuff. And he thinks they should stop doing that. By doing so, you could save $15,000, and over 23 months, that's $66,454 saved instead of using or in addition to a line of credit. Thank you for joining me today. I know you've got questions and comments, so drop them below. I'm eager to hear what you think. And remember, you don't need a financial advisor, your mom, or a bank to tell you what to do with your mortgage. Now you know the game, and you can play to win. Sure, you'll still pay some interest, but imagine chunking that $10,000 once a year. Think about the money you'd save instead of handing it over to the bank. Get smart with your money, take control of your debt, and stop letting it control you. I'm grateful you're part of this community wanting to understand and control your finances. If you enjoyed this video, please like, share, and subscribe. And hey, if you're curious about this $1.5 trillion debt-fueled tsunami crashing into our commercial real estate shores, Warren Buffett himself is sounding the alarm. Check out this eye-opening video by clicking on the link if you want to know more.